Hi guys, hope everyone is doing well. Welcome to one more video. Now today is a very important video and probably the most important video if you want to become a profitable trader consistently over the years. And this video is not about technical analysis. This video is about more important things than technical analysis. Yeah, because over the years I am seeing the trend is changing towards how to learn technical analysis and what are the signals you can take from groups, what are the points for buy and sell, what are the take profits area. Now, believe me, none of this would matter if you don't understand this, okay? So, this is the first topic you need to master on. If you haven't mastered this yet, you should not be trading, okay? Because if you're doing your trading or your analysis or you're putting in so much of effort day in and day out, and you still see that over the years you're not able to make consistent profit, the only reason is because you're not focusing on bigger things, okay? Now this is a very important secret which no one gives you for free, but because we are here to help you guys, and like I promised in my introduction video, I will give you a preview of the course I offer to my guys. Now, I cannot cover everything in one video, so I have tried to shorten it and I have tried to condense it to one document format because if I don't give you in a document format, then you won't be able to understand what I say. Yeah. So keep the document with you and believe me that this is the video you don't want to skip any part of it. Okay. If you want to become a profitable trader, take it from me that you have to watch this video step by step. You have to understand this video step by step, and you have to execute the steps in this video step by step. Okay. If you do this, then there is nothing which is going to stop you from succeeding in trading or making trading a full-time job for you. Okay. Because I have not put in points here which everyone is putting in YouTube or Twitter or Google or wherever. Okay, there are a lot of mistakes which traders do, but I have my top 10 mistakes which I focus for my people who take my courses. I focus on these 10 points first to improve their mastery over these 10 points, and only then we shift to teaching them how to do technical analysis and the other parts of trading. Because believe me, making a trading strategy, understanding how to trade and how to draw your charts is the most simple thing in trading. Okay, anyone can learn it. Any Dick and Harry can sit for 2 3 months, do some courses and learn it. But if you don't understand what I am supposed to tell you today, then none of this would matter. Yeah, you will still fail. And if you are not able to understand that even after putting so much of effort, why are you losing money trading? Then this is the video. This is your answer. Okay. This is a reality check for you. So I have kept the video as practical and as real as possible. I have not given you concepts here which I think is right. I have given you concepts and tips here which macro traders or big traders over the years have developed, and the document format has been made in such a way that it is motivational as well as informational. Okay, so this is just a preview for you, and if I cover everything in one video, then it'll be just impossible. Probably the video will be 10 12 hours long, so I'll just give a small preview for you, and I hope that you can benefit from this. Okay, now out of all the things that I see on internet, there are a lot of ideas, that you people mistakes you need to rectify in order to become a profitable trader. But I think that these are the top 10 mistakes that you need to rectify in order to become a profitable trader. Now, believe me, there are no other mistakes other than this. Okay, people are just making other things to fill it up or fill up their blogs or fill up their YouTube channel. But these are the top 10 mistakes. Okay, even I was struggling to find 10 mistakes, but I'll added it down eventually, and I believe that out of this, there is nothing else which you need to do in order to become a profitable trader. Okay, so having said that, let's start with the video. Now, like you can see, this is the document I'll be offering you over a period of time. Okay, I'm thinking that I'll write a blog on it and I'll post it on my blog page. We'll be coming up with the blog page next week, so where I can post such things for you to read on. And please take a screenshot of all this, make a binder, and keep it beside your desktop where you're trading. And please review this or try to correlate this with the trades you take. Okay. Now let's start with top 10. So the first point is chasing a trade. Okay. Now what I mean by this is when you have missed a trade. Okay. Like you were sleeping or you were out or you were not near the charts, you were driving, you're probably working, and now you have come back and you see that you have missed the trade. Yeah. Now chasing the trade means that this was your point of entry. Okay. Now you have missed your point of entry and the price has come here. What you do is, because you think that you have missed the trade, what you do is, irrespective of your analysis or the trading strategy you have built, which says that do not enter a position till a resistance level is broken. What you do is, after it is broken, you try to long near the next resistance, okay, without even thinking about this resistance line which comes in picture, okay, because you can only see, your mind will only show you that you missed a trade and you need to enter the trade. Okay, so you don't wait for the pullback. What you do is you enter your long position here and then the market pulls back on you. Okay, then you start calling the markets are manipulative and there are a lot of whales, we are trying to liquidate you. Believe me that nobody is trying to liquidate you. Yeah, it is your own bad decision that you have entered. Yeah, so you have to wait for the pullback and only then enter. Okay, even if you have missed this position, then this trade is away. Yeah, there is no entry point after this line over here. Okay, so the problem that you are facing is, you need to understand that you cannot take trade, you cannot take every trade. Okay, always. Now why it affects you is because the trade fits perfectly to your strategy but you have not taken it. Yeah, now this false profit or the paper profit that you have missed over here is what is going to force your monkey brain. Okay, now there are two kinds of brain in your head. One is the monkey brain and one is the analytical brain. Now the analytical brain switches off and the monkey brain switches on, because the only trigger for your monkey brain is the constant feed of dopamine. Okay, now because of the false profits that you have missed over here, your monkey brain would tell you, enter the trade, enter the trade. Now you enter the trade here, it pulls back on you, you have already got stopped out. Yeah, you can see that your stop loss amount of 1 to 2% has been hit. You're out of the trade and now you're frustrated. Okay, now this has only happened because your entry point was not perfect and you can get easily stopped out as the market will move against you. Okay, because that is why I say in leverage trading, entry has to be perfect. Okay, so now the solution to it, if I see, is that do not let paper profits affect you. Okay, like paper losses should not affect you, but they should give you a warning that there is too much loss and you need to get out of the trade. Similarly, paper profit should not affect you. Okay, like if you have missed the trade, let it go. There'll be hundred of trades which are going to come in the future. Okay, you are never going to miss out on trading. Believe me, till there are markets, till there are people, you are never going to miss out on trade. Okay, so if a trade is gone from your strategy, leave the trade or wait for it to pull back, assess new entry points. Okay, so now this is the first point of the solution, is that paper profit should not affect your mindset. Second point is, remember, you will get many trades like this. If this trade is missed, let it go. Wait for entry during a pullback or appropriate Fibonacci levels. Okay, like I discuss in my videos, that if an uptrend has happened, then wait for appropriate Fibonacci levels or the golden pocket to hit so you can enter again. Now the only problem in this trade is, if you enter over here, you would put your stop loss somewhere over here. Okay, so your stop loss amount, which is your risk amount, which is 1 to 2% of your portfolio, is safe here. Okay, but if you enter here and the trade starts to pull back on you, what you do is you try to lower your stop loss from here. Okay, now your risk factor is not more than, is more, much more than 1 to 2% of your total portfolio. Okay, so now you can see that you've already violated the trading strategy that you have set for yourself, that my stop loss or my risk amount cannot be more than 1% of my entire portfolio. Okay, so you start shifting your stop loss and the market starts reversing on you. Finally, you hit your stop loss. Okay, so now this is the pullback you need to wait for, but there is no guarantee that if you enter here, markets won't reverse little bit more back on you. So if you are in this position, one solution is to lower your leverage. Okay, because if you lower your leverage, you can increase your stop loss amount but keep the risk same. Okay, now this is a little bit technical. I do not know if you understand this, but the basic thing is the higher leverage you are, the lesser stop loss you can keep. Okay, mathematically, if I want to explain you that if you have a 10x leverage and a 1% stop loss, then if the price moves down by 1%, you lose 10% of your margin, which is 1% of your entire portfolio. Okay, but if you lower your leverage to 5x, then the price needs to move 2% down. Okay, so your stop loss can now be increased to 2%. But you will, if that stop loss gets hit, you are still losing 5 multiplied by 2, which is 10% of your margin and 1% of your total portfolio. Okay, I'll make a separate video on it and I will show you on the live charts. But this is the basic. Okay, you need to understand this. Yeah, so if you have managed to not enter the trade properly, or if you have messed up your entry, lower your leverage. So that will give you an ability to increase your stop loss. Okay, so this is about chasing the trade. Later in the end of the video, we'll come to live charts and I will show you what is the mistake that you're doing. Okay, now moving on to the next point is using messy charts. Okay, you can see that this is a chart I have picked up from Google. I do not know whose chart it is. For sure, it is not my chart. But you can see this chart is full of lines, Ichimoku clouds, Bollinger Bands, hundreds of indicators over here which are telling you when to buy, when to sell, blah blah blah, thousands of oscillator indicators over here, MACD, RSI, stochastic, volume, histograms, n number of things. Okay, it just does not finishes. Now if you're in the mobile, it's even worse because the space left for you to see the price action properly is even shorter. Okay, if you are in a desktop, you might, as it might help you a little bit. Okay, but you can see the problem here is the chart is full of trend lines, support and resistance line from all time frames, because I see people have developed a habit of drawing support and resistance right from daily time frame coming down to 1 minute or 5 minutes time frame. Now you need to understand that lower time frame support and resistance doesn't matter at all. Okay, it is only the higher time frame support and resistances. I will make one separate video on how to trade using support and resistance and we'll discuss more on that. Now because of so many indicators on chart, the price action has very little place left to see, because there is so much of triangles with buy and sell levels on your charts that you can hardly identify how the price is looking like. Yeah, so the risk you are exposed to here, yeah, you're more focused to shorter time frame price action. Yeah? What I mean by this is that you come and you only see 5 minutes time frame and you decide that okay, this is the trade I want to enter. You do not analyze the environment you are in, or you do not see the macro picture. Macro picture, I mean that if you think that you are entering a 5 minutes time frame trade and you want to be in that trade for the next 3 to 4 hours or the next day, okay, maybe this is an intraday trade for you. So don't you think that analyzing the 4 hours or the 8 hours or the daily time frame first is important, rather than seeing the 5 minutes time frame only and taking the decision to enter a trade or not? Okay, so this is what I mean. So you completely miss major demand and supply zone over here. The fair value gap which needs to be seen is completely missed. We'll talk about this in a separate video. Okay. Now the analysis made to enter a trade is dependent on a lot of lagging indicators and false patterns. Okay. Bollinger Bands is a false pattern. Only after the price has put in a certain data point, Bollinger Band is reflecting it. The similarly, MACD is reflecting the same thing. These are all lagging indicators. Okay. There are no leading indicators in technical analysis. You need to be very clear. Okay, one oscillator indicator is useful, but most of them are lagging indicators. Death cross, golden cross, I don't know what terms people have come up with. But believe me, if a price does not go down, a death cross won't happen. And if a price does not go up, a golden cross won't happen. Similarly for MACD, if the price does not come down, the MACD won't go red. If the price does not come up, the MACD won't go green. Okay. So if you are doing your trading on the basis of MACD only or moving averages only, then you need to stop it. Okay. You need to analyze price action first. Okay. So the solution to all this is focus on learning price action. Like I always say that learn how to look at price action, understand how price behaves, okay, rather than be reliant on indicators. Plan your entry and exit on the basis of higher time frame support and resistance. Patiently wait for the level to hit. As smaller your price action, bigger the candle looks. So what I mean by that is if you go on 1 minute time frame, the candle will look so big to you, that one green candle, that you think that you have already missed the trade. But when you zoom out and you go to the 15 minutes time frame, that candle will look like a very tiny candle to you. Okay. So do not go to 1 minute time frame and mess up your mindset. Okay. There are various techniques how to trade 1 minute time frame. Maybe I'll come up with a video on that. Okay. So uh, use price action. Now, what I do is I put price action. I put only one oscillator indicator. Now, there are several. I use RSI because I like trading with RSI, and few moving averages. That's it. You don't need anything else. Okay. Group your drawings as per the trade you want to take. Like I explained you in one of the videos I made before, that how can you group your drawings. Okay. Now that depends on what is the point you need to achieve here. Yeah. Is it a shorter time frame trade, or is it a macro time frame trade, swing trade, whatever. Group your drawings and name them. Okay. Delete all indicators, as the only thing they do you is confuse you and hinder your thought process. Okay, so delete everything. Now this is about messy charts. Moving on to the next mistake, paper trading. Okay, this is a very hot topic. Now I know I'll get a lot of hate for this, but I don't believe in doing paper trading. Okay, now the reason I'll explain you is why is because when you start paper trading, everyone says do paper trading. You start paper trading right away without developing any knowledge of technical analysis. Paper trading gives you a false confidence that you are ready to start real trading. Okay. Paper trading damages your thought process, as it is not a real life simulation. Now, what I mean by that is that when you don't understand technical analysis to the full aspect of it, and you go and start opening chart and taking trades. Now, the problem with paper trading is there are two types of paper trading. One is you can backtest the chart, or you can take real charts. Okay. You cannot take real chart. You cannot do paper trading on real chart properly because you do not know technical analysis. If you do not know how to forecast a price action, then what is the point of paper trading? Yeah. But once, because of fluke or because of luck, if two, three trades get hit, then that paper trading is giving you a false confidence. Okay. To start real trading. Yeah. What I will suggest is that now, because of this false confidence, you go and start real trading and mess it up completely. Okay. Now, because the only problem with this is because of this false confidence, what you do is you start trading with higher capital altogether. Yeah. Now, what I'll recommend is do not start trading unless you understand technical analysis. Okay. Now, once you have understood it, start with lower capital. Okay. Because the lower the capital is, the more time you can give yourself to learn. Okay. Like you can see the tag I've put here, learn every day, but especially from the experiences of others. It's cheaper. What I mean is that if you enter a market, you will lose money. It is a proven fact. You have to lose money. Okay. Think of it like an investment. Okay. Now, the important thing to take from here is if you lose real money, you take valuable lessons from it. Okay. But if you're paper trading and you lose a trade, it will not affect you and it will not register in your mind. Okay. Your monkey brain will keep saying that, okay, I've lost a trade, it doesn't matter. I will win the next five. Yeah. Only real money losses will make you a good trader. Now, believe me, this is a proven fact. Okay. I'm not saying go and start with $1,000 capital. When I say start with a lower capital, that equates to 1% of your total portfolio using the strategy you have made or you have laid down for yourself. Okay. So don't do paper trading and don't get false hopes. Okay. Start with $10 trading when you think you are ready to trade. And even if you lose that $10, think of it like an investment you have made to learn the markets. Yeah. Moving on to the next point, which is a major point, that not taking profits in time. Okay. Now, why this happens is because you do not see profits in terms of percentages. Okay. You are only seeing profits in terms of dollars or rupees or whatever currency you're using to trade in. Okay. What I mean is that when you enter a $10 margin trade and you are in 50% profit, you are seeing only $5. Okay. Now in your mind is saying that this trade can go 10x. So you are thinking that you are going to win $100. Okay. So that $5 which you have made is looking very small in front of the $100 you think you are going to make. Okay. But you are missing the big picture here, that you are just starting trading and you have already made 50% on your first trade. There is nothing like it. I mean, big traders don't even aim for 100, 200%. I take my first profits when my trade hits 70% mark. That is my first take profit zone. Think I'm trading for so many years. Okay. Now the problem over here is you think a small capital means lesser profits. The greed of making money faster leads you to invest higher capital with lack of experience. You try to take a trade with less capital and win it. Yeah. When you take less capital trades and you win it, you feel more confident. Then you go and use your full capital and you lose all the profits and your margin in one trade and you're done. Okay. Because the mind tells you that now you are winning all trades, you are prepared, you are the next big trader who is going to come. So put all your margin and lose it all. Okay. I've seen it people doing over and over and over again. Yeah. So now the solution to it is entering the right trade is more important as a trader. Yeah, because this validates your strategy. If you win a trade which you have planned for yourself, that which you have strategized for yourself, or if you win a trade which you have gambled and just taken a bet on, both the things leave a different impact on your mindset or on your confidence. Okay, believe me, that is going to happen. Look at profits in terms of percentage, not dollars or rupees. Once you do that, your mind will tell you to take profits automatically. Now, if you train your mind to see percentages, then you will see that profit taking will be very, very easy for you. Yeah. Aiming at a risk to reward of 1 is to 2 only from every trade is good enough to begin with. Once you trade, once your trade is safe, take some profits and put stop loss to entry. Yeah, you can always enter the trade again, but don't let a winning trade become a losing trade because of your greed, because that is going to hinder your confidence. Yeah. So I have a very famous quotation here that if you try to get rich faster, you will become poor quicker. Okay. Now moving on to the next mistake over here is that you change your strategy too often. Okay. Now you can see Peter Lynch, his famous quote over here: in this business, if you're good, you are right 6 times out of 10. You're never going to be right 9 times out of 10. Now Peter Lynch is saying that you cannot win more than 6 times out of 10, but you want to win all 10 trades. Yeah. Now the problem here is you devise a trading plan or strategy after backtesting it, brainstorming it, putting in so much of effort, and you only like the strategy till you're winning the trades. The day you start losing trades or you see someone doing something else which looks better, you stop following your strategy. What happens is you change your strategy too often, which leads to loss of capital because you need to adapt to a new strategy. And then you think that trading is not for you and you get depressed over time and lose confidence. Yeah. Now, the solution to it over here is backtesting has to be good in a strategy. Don't use regular charts as they show you the future price action. Use the candle play app on TradingView. Okay. So do not open a price chart and go and backtest it. Try to use the play button on TradingView and try to simulate it real time and then backtest your strategy. Okay. Now, once you have locked in a strategy, follow the strategy for 3 months at least and try to apply it while backtesting on different kinds of market: bear market, bull market, consolidation market. Okay, we'll make a full separate video on how to backtest the strategy. Yeah, this is a very big topic. Any strategy with 50% success rate is good enough for you. Okay, not even the best can win 100% of the trades. Stop blaming yourself. Yeah. Now moving on to the next mistake is trading every day. Okay. You can see that Bill Lipschitz has told here that if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. Yeah. Now the problem here is that when you are trading every day, you tend to take setups when a trade is not there as well. Yeah. So if a trade is not fitting your strategy, but because you don't have any trade setups, your monkey brain, which wants dopamine continuously, is telling you go and take a trade, go and take a trade. So even if you sit in front of chart, you will only look that what is the trade I can take, and you will enter a trade when there is no setup. Okay, and then you lose that trade and you lose confidence and your profits. Okay, now the solution to it is some days when there are no setups, stay away from your charts. Put alerts at your interest level and only access the charts when you get alarms. Okay, on the alerts that you have set in. Don't trade coin pairs you have never traded before. Okay, now this is very important because if you don't find setup on the assets that you normally trade, you start looking for other assets which you don't understand how they move. Okay, and then you mess it up completely because you do not understand how that asset behaves, and you start pushing your strategy on that asset. Till you have not backtested the asset you want to trade on, do not trade that asset. Stick to your own assets. The more you watch charts, the more your monkey brain will try to find setups for you which are either bad or not as per your trading strategy. Focus on improving chart analysis and data point predictions on those days. Yeah. Use, if you want to see charts or if you're addicted to seeing charts, then focus on chart analysis. Put some music. Tell yourself that today is not the day to trade. I will stay away. Yeah. When news comes out, there is a lot of market manipulation, like I've been explaining you over times. Stay away from trading those days. Weekend are low volume trading. Stay away from trading on weekends. Remember, sometimes not trading is also trading. Yeah. Moving on to the next point, which is revenge trading. Very famous topic. Everyone must have done it. I myself have done it in my beginning days. So you can see that the basis of revenge trading means that when you enter a trade that satisfies all your thoughts, strategies, rules, and everything, but the trade goes against you and you lose the trade, then you forcibly enter a trade trying to recover that loss or the loss you have had for the day. Okay. Sometimes the trade hits your stop loss and goes again in the direction you thought it would. Yeah. That means that you have planned a trade, but your stop loss get hits, but it progresses in the direction that you thought it would go. Then you try to chase the trade or you revenge trade, trying to get into that trade too early. Then the market reverses on you and you get stopped out again. Okay. Sometimes markets are very volatile. Maybe your strategy is good, but your leverage is very high. So reduce your leverage on those days so you can give breathing room for price action. Okay. If you still get stopped out, wait for the perfect entry again. If you are in fear of losing out, start layering into positions. Start with a small position. See how the trade is building. Then if you think that it is going in your favor, try to add more positions. Okay. This way you don't feel that you are not in a good trade. Blaming the market is like hitting the wall with your fist. Nothing is going to happen. Only one to get affected is yourself. Train your mind to be calm in every situation. Okay. Don't let market behavior affect you. Now the next mistake that you do is poor trading psychology. Okay. Now this is a very important. I think this is the second most important factor that will determine if you want to be a profitable trader or not. Because trading psychology basically focuses on two things. One is fear and one is FOMO. Now the FOMO, what it does it pushes you to enter a trade when there is no trade. Okay, and you mess up your setups, you mess up your entry points. Now what the fear does, it does not let you put the stop loss at the right place, and it does not let you take profits at the right time. Okay, so if the market has gone opposite of what you thought it would do, because of the fear you start increasing your stop loss. Okay, you don't let the price action hit your stop loss and get out of a losing trade. Yeah, you try to keep adding margin to the trade. Okay, remember, never add margin to a losing trade. Okay, that is the biggest mistake that you can do. Okay, significant loss of capital can happen because of this mistake. Now, the solution to it is you spend so much time on understanding technical analysis, but you should majorly focus on how to develop your trading strategy. Now, there is a book I would refer if you want to improve your trading strategy. Somebody asked me this question before also. Here is the answer. Trading in the Zone by Mark Douglas. Okay, this is the book you need to start on. I will give you a link, Amazon link for that book down, and you can go download it and read it. Okay. Now, I think there is a Google Audible on it also on YouTube, and that is for free. So just go to Google, YouTube and type Trading in the Zone by Mark Douglas Audible, and you can play it when you're taking a shower or you're going in your gym or you're driving. Read that book. Okay. You should build your mindset in such a way that you can take profits from trades and avoid the greed. You should work with stop losses always so you can battle your fear. These are the two solutions. Okay. Remember, if you can create a mindset that is not affected by market's behavior, the struggle will cease to exist. Yeah. Moving on to the next, which is quitting too early. Yes. Now, this is very standard. When you start losing trades continuously, you start blaming yourself, you start losing confidence. Trading becomes very, very stressful for you. You think that this is not for me and you quit altogether. Okay. Now, statistics shows that if you quit within the first 3 months of trading, you can never be a profitable trader. Quitting, taking a break is the same thing. Okay. Because if you're away from the markets even one day, you have taken a break. Okay. Now, remember, first 3 months that you spend in the market, you are getting exposed to real conditions of the market and real behavior of the market. Use them as stepping and guiding stones for your trading journey. Have patience. The day will come when you will start becoming profitable. Keep at it. Okay. Do it consistently over and over again. Follow your strategy, analyze your mistake, gather yourself, move on. Stop whining or whipping about it. Okay. Patience is going to reward you. Remember, if you take your own decisions, then you will blame only yourself. Okay. This leads to acceptance and helps you in moving on. Understand? So take your own decisions so that in the end you can only blame yourself. Yeah. Now, moving on to the next one, which is not having a daily routine. Now, this is a very standard practice I have seen that you come, open Twitter, open YouTube, see for setups. Whoever says what, you go and take that setup. Okay. Now, if you do not have a daily routine, you are not going to love trading. Okay. You're not going to do it. So you do not recognize the environment you are in and start trading as the day starts or as you see a chart in front of you. The lack of discipline of following a process lets you make a decision which is not wise or goes against you. Now, the solution to it is develop a daily routine for market analysis and approach. Follow the routine every day. Today, the video which I have uploaded earlier prior to this video, there is one more video which you saw. There I have shown you the daily analysis pattern I follow for Bitcoin. Go and watch that video. I will make one more separate video about how I do my daily routine and you can use that. Okay. Only after following your daily routine, take the trades. Okay. Um, don't trade on mobile devices. Use a desktop setup as it brings more discipline and wakes up the mind you sit and analyze. Now, this is something I believe you need to do if you want to become a profitable trader. You need to have a desktop or you need to have a desk where you can keep your laptop, where you can sit, play some music, enjoy the sun, make the analysis. Okay, because if your mind is not calm and you're making analysis, it is not going to help you. Remember, it's your hard-earned money you're putting online. Think every possible aspect that can take the money from you. Okay. If you do this, then you will follow a daily routine. Yeah. Now coming to the last and the most important point of this all, none of this point would matter without this point. So believe me, this is the most important rule, which is called as risk management. Okay. Now you can see Peter Lynch said that far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in correction themselves. Now what he means by here is when market is falling or rising violently, you will end up losing all your capital because you don't want to manage the risk at that time. You think that markets will bounce from this region, or you think that if a support is broken, market is going to fall from this region. So you end up entering your trades, you end up getting stopped out again and again and again. As you get stopped out again and again, Your portfolio is going down, but your stop loss amount still stays same, and your leverage amount still stays same because you want to catch the bottom. Catching falling knives requires a different kind of skill, which I will make a separate video on. Do not do it, okay? Manage your risk. As your portfolio goes down, everyone's portfolio goes down, okay? Because you cannot win all trades. Lower your risk. And as your portfolio goes up, lower your risk. You have to do risk management both ways, okay? If you do not understand risk management, none of this would matter. Yeah. Now the solution to this is do not risk more than 1 to 2% of your entire portfolio in any trade you take. Don't let profits or loss, fear or FOMO change this rule for you. Okay, 1 to 2% of your entire portfolio should be the maximum risk you have to take in every trade you enter. Okay, set up a time horizon for your trades. Think, do you want to be in a trade overnight? When you are sleeping, do you want to be in a trade? What if the market reverses against you? If you are in some profits and you don't want to go through that stress overnight, you want to have a peaceful night, just close the trade, take your profits and sleep. When you wake up next day, you will have more setups, more trades to take on. Set automated levels of profit taking and stop loss. If you do not automate your take profits and stop loss, you are never going to rectify the FOMO and fear from your mind. Okay. Once this starts happening slowly, you can see that slowly the fear and FOMO will go up. Okay, don't go all in or all out from a trade. Don't use full margin ever. Don't use high leverage till you know how to manage your risk. Okay, we use high leverage as experienced traders because we know how to manage the risk. If you do not know, don't do it. No matter how good a trader you are, without proper risk management, none of this would matter at all. Nothing would matter at all. Okay. So these are the 10 points, guys. I'll try to make a separate video on each point and explain you one day with live chart analysis. The video is already too long, so we'll stop it over here. And I hope that you have watched the video in full, and I hope that you have taken some lessons out of it. Remember, success doesn't just come and find you. You have to go out and get it. Okay? Thank you for reading, guys, and thank you for being in this video with me. Now, this is a very good video, I think, as per me, that I've put in all the points. And I hope that you learn from these top 10 trading mistakes. And I hope that you go and implement this. Okay. And I hope that you have taken some benefit out of this video. Thank you for watching, guys. Try to share this video in as many groups as possible. So as many people, more people can benefit out of it, because I think that if they understand all the points I have mentioned or said in this video, there is nothing which can stop you from becoming a profitable trader. Okay, we'll come up with one more video where we'll do live chart analysis, and there I'll show you what are the mistakes you're doing and how you can avoid them. Yeah, thank you for watching, guys. Take care, everyone. Have a good day. Bye bye.